there is one point which is critical to understand. When we raise the interest rate, as we probably will do one day, from 0 to 25 to 25 to 50 basis points, we will be moving from an ultra-expansionary monetary policy to an extremely expansionary monetary policy. What is not acceptable is manipulating exchange rates, purely exchange rates, trying to use that as the sole means of generating growth. That has not happened as far as we can tell in our partner countries.
I think the larger trend for the euro to the downside is still very much intact. I mean, what we're seeing is a period of rather decent volatility. In fact, last Wednesday's move was the largest we'd seen since 2009. As effectively, the euro dollar short and the U.S. dollar long position had become one of the bigger ones in financial markets, and the turn last week has led to a lot of people questioning that theme a bit. But I don't think it's damaged a larger trend in any way, shape, or form.
Well, I think very short term, that meeting was seen to be somewhat dovish, and therefore it's had an effect on the currency. But over the medium term, we do see the dollar going higher against most currencies, particularly against the euro. We've been of the view that the euro would weaken quite sharply this year. We think it will get to around 95 cents over the next 6 months, and ultimately to probably around 80 cents over the next couple of years. But this is largely a function of growing interest rate differentials over time between the US and Europe and other parts of the world. Well, I think, as we were discussing earlier, the prospects for the domestic economy are improving in the US. Unemployment is coming down quickly, wage prospects are improving, and I think you are having a number of tailwinds for the consumer. And the consumer is the biggest part of the US economy, and also with a stronger dollar, purchasing power is picking up as well. So I think those factors help to support the domestic prospects for the US economy. Correspondingly, in places like Europe, you're finding that companies with high dollar exposure are understandably doing very well. But interestingly, we're also finding domestic cyclical parts of the market are picking up also. And I think, again, this reflects a generalized easing of conditions for households and for consumers in general after some years of significant austerity and falling real incomes.